Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday 4th of December. There's been some big shake-ups in markets in the last couple of days. Donald Trump really did put the wind up the bulls. Actually, the fact that yesterday he questioned whether this trade dispute agreement to phase one may not even be coming before the election for the presidential election in 2020. Now that has significantly impacted through markets. We've seen gold sharply higher yesterday, and we saw the yen strengthening, and also we saw treasury yields coming sharply down, and that really showed the flow into safe havens. There's been a slight turnaround today. We've had some PMI data out overnight. Chinese Cajun PMI came in at 53.5, so that was a big improvement actually from 51.1 last month. But also we've seen that the Eurozone data has also come out better than expected. Final services PMI at 51.9, so the composite PMI remains at 50.6 as opposed to a slip back to 50.3, and that has helped. The DAX certainly has picked up off the back of that, and broadly speaking we're seeing fairly positive risk appetite coming through now this morning into the European session. The dollar remains under pressure. Look at this sharp move to the downside on the dollar, but also equally risk appetite is not all that great either. Look at that move that we've seen on the Chinese yuan. Big sharp weakness across the yuan on what Trump said yesterday, so some big volatility we're seeing coming back into markets now in the last sort of day or so. We're looking out for the oil price in the next couple of days because we've seen the sharp move to the downside, but obviously we've got the OPEC meeting tomorrow, prospect of an extension to the production cuts, potential for maybe towards the end of 2020 that extension, so that would be supportive for the oil price, and the oil is edging higher on the back of that. We've got the EIA inventories later on today. But there is certainly a focus, I think, today on the PMI data. You've got the UK PMI at 9:30, expected to be 48.6, so still mired in Brexit and election uncertainty, but predominantly Brexit. And into the afternoon, we're looking for, first of all, the US ADP number, expected to be 140, so remains around about sort of the mid 100 levels there, which is sort of pretty much where we're expecting the non-farm payrolls number to come out as we sort of continue to go into late cycle moves. And then also we're looking out for the ISM data, the ISM non-manufacturing PMI, which is expected to be 54.5. Now, on Monday, we saw the manufacturing data from the ISM disappointing quite significantly to the downside. So watch out for how that affects risk appetite this afternoon. 54.5 for the non-manufacturing PMI expectation. We're also looking for an inventory drawdown of 1.7 million barrels on weekly crude stocks. So yeah, lots to get your teeth into today. Now, in terms of my chart of the day, we are looking at the DAX. Now, what we've seen is equity markets rolling over in the last few days, and you can see that through the DAX. This sharp move to the downside on Monday, but interestingly enough, DAX actually closed higher yesterday. Now, this was a topping out effectively of the DAX. Now, how the market responds to this bull candle that we've seen develop today, 150 ticks higher on the DAX today, but you look at these momentum indicators looking corrective. But what I sort of mentioned on the morning report was that this is a similar sort of situation to what we saw back in October. We saw two sharp moves to the downside, and then we started to find support and went on the next bull run. Now, in that move, I haven't got the fib levels of that August to October rally. However, that was bang on. That low of 11.879 23.9 was bang on the 50% fib retracement. Now you can see that the 23.6% fib retracement has been the basis pretty much of the reversal so far. So it'll be interesting to see how the market responds to this rally today, because obviously we've seen that move back into sort of the belly of this top pattern that we've had over the past few weeks, which completed and closed to the downside on Monday. Now we've seen this move that's unwinding momentum indicators, so I think you'd want to see the RSI on the hourly, for example, above 60 to really suggest that the bulls are getting back on track. You've seen a move back towards 13,160, a basis of a pivot around there. It's not exactly to the tick, but it was interesting that the market just turned back from that point earlier, just earlier this morning in the recent few minutes. So it'll be interesting to see how this one develops now. But you can see that there is certainly a stalling of this uptrend, and whether this rebound now starts to sort of dissipate again and fall over. You've got the 21-day moving average, which is flattened off and comes in around 13,190. So could that start to become a basis of resistance as well? So again, you'd be looking at that as a trigger point if you start to see the DAX closing above that and pushing back above it. But there are certainly signs of a potential corrective move, and there is more, as I said, through this sharp move to the downside in October, where we saw the momentum indicators falling away again back towards neutral levels. Your RSI hitting 40, MACD lines hitting neutral. You haven't quite seen so much of a corrective move yet, so that could mean either that there is more room in a corrective move, and it just depends on whether this rebound that we've got, this sharp rebound that we've got, starts to dissipate or not. So it's one worth watching. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, and go to our website to sign up for our webinars. Thank you.